Hello everyone, myself Vaibhav. In today's session of Visual JForex, we are going to learn about the indicator named TRIX. This is an oscillator indicator and it is sometimes also called as the triple exponential moving average. But actually it is the one period percentage change of the triple exponential moving average, and we will see how it is utilized on the Visual JForex platform to design and develop the automated algorithm to trade on the JForex platform. Let's get started. It is listed under the oscillator series. So far this week we have seen the indicator blocks till standard deviation. In yesterday's session we learned about the standard deviation block, the use of it, and now it's the turn of the tricks. Here we don't really have the description, so we straight away head to the Visual JForex board developed by Dukascopy Bank SA. To those who are interested in knowing how it is calculated, I have included these steps to carry out the manual calculation, but for us the calculation will be done by the system, so we don't really need to be bothered. But to give you a brief idea, it is actually the EMA of the EMA of the EMA. So you can say that we have to kind of take the EMA thrice to arrive at this, and then we take the one period percentage change of rate of the rate of change of the triple smooth exponential moving average. So we will see how this indicator functions by plotting it on the chart. This is the Nasdaq chart. Let us change it to one of the currency pair. In today's session, we will stick with the Euro USD. This is the currency pair of choice for most of the traders, and it is one of the most widely traded financial instrument. Now this chart is of the hourly time frame, and TRIX, the default setup is of 30 time period. So as you can see, we have plotted the TRIX on the Euro USD's hourly chart. And to give you a brief idea, the use of this indicator is basically to see what is the trend of the underlying instrument, and to get us to give us a good idea of the direction of the change of the price movement in the underlying instrument. We basically rely on the values of this indicator. The positive value, that is the output value above 0, is considered as denoting bullish sentiments, whereas if the output value for the TRIX is below 0, that is indicative of the bearish sentiments prevalent in the underlying instrument. So you can say that this indicator basically oscillates around 0. Sometimes it is positive, sometimes it is negative, depending on the price action we are observing in the underlying instrument. And in a way, this is also the unbound indicator. We don't really have the limit, but it doesn't crosses above much bigger values. It basically, you can say that more often than not it is pretty close to 0. So we don't need to go into the details of that. But another way to use this indicator is when we see that after the substantial move on one direction, whenever we see that the momentum is now shifting, and positive values, though the output value is in positive territory, it starts to decline. That kind of gives us an idea that it is time to get out of the trade if we are long, and if the value starts to rise after being in the negative territory after long, we can think about getting out of the short sale positions. So that way also we can use this indicator, but basically this is the indicator which will guide you in looking at the trend of the underlying instrument. And to determine the strength of the trend, you will have to use other indicator in conjunction with this indicator to give you the precise idea of what is happening in the that particular instrument. Now, to define the parameters, we will have to do bit of experimentation to see what are the likely setups which might bring us profit. In today's session, we will use the onTick as our start point for defining the input parameters. To initialize the block, we have to choose a start point, and any of the three can be chosen as our start point. Now, coming to the instrument of our choice, the default instrument usually it is Euro USD, but you can change it if you feel like. We have all these instruments listed here. So these are the instruments on which you can design and develop your algorithmic setup. For today's session, we keep the Euro USD as it is. Now coming to the time period of the candlestick is a very important parameter, and to define what should be the appropriate time period for the candlestick which will be used for calculation of the TRIX, we have to observe and we have to decide what is the time horizon we are trading on. If you want the trading to happen uh, say from the intraday perspective, then it's better to stick with the lower time frames, like say for example 10 minutes. But if you are more into the swing trades and you are looking to trade from the longer time horizon, then I think you should better stick with the time frames, like for example 4 hourly. So that's how it works, and as you can see, this indicator will show you the change in the direction of the trend of underlying instrument. And as I said, whenever value rises above zero from below zero, it is indicative of the changing sentiments, and you can observe it here. And prior to that, when the value declined below zero from above zero, it was indicative of the trend shifting on the bearish side. So that way we can use this indicator, and it is fairly useful. And to get more precise idea, you can use multiple indicator blocks also to see what's actually going on a closer look. So these are the time frames here which can possibly be taken. We can also work with the half an hourly. We can work with say 15 minutes or 4 hourly or 1 day. So this is the chart for half an hourly time frame for the Euro USD. Let us take the 10 minutes as our time period of choice for candlestick. So we don't change this candlestick's time period. We keep at 10 minutes as it is. Shift is the look back period, the time by which you want to go back in time. If you want to take into account the output value, say 1 hour back, then you will need the look back period of 6. If you want to take the current value into consideration, then the look back period should be at 0. So that's how this works. And for doing the comparison, you will need to take the prior values into consideration, and that's when this look back period will come handy. You can simply keep the parameters apart from this look back period as the same, and then by considering the value over different period of time, we can see what is happening, whether the underlying momentum is accelerating on the upside or it is going down, the trend is on the bearish side or the bullish side, and which way it is likely to shift in the near future depending on the prior moves. So that's when this shift value comes into question. The time period for calculation of the TRIX, this is very important. Now the default setup is for 30 minutes, but if you want the TRIX indicator to be more responsive, you can reduce the time period for the calculation. So here we can change this parameter. For example, if you want to lower the time horizon on which the TRIX is going to be calculated, you can reduce that. You can make it, for example, 20, you can make it 10, you can make it 5, and shorter is the duration on which the calculation is being done for the TRIX. More responsive will be the TRIX values to the recent price change. As you can see now, the 20 time period TRIX value is a lot more responsive than what we were looking at when the TRIX value was based on the 30 candlesticks of 10 minutes each. So that's how this setup works. And then coming to the applied price, here you can choose different applied prices. Now the calculation is being done on the closing basis, but if you want to take into consideration the different applied price, then the calculation will be done accordingly. So you have these options listed here: close price, open price, high price, low price, median price, typical price. So all these options are here, and basically you have to see what is the appropriate applied price, and then depending on your observation and the utility of that particular price, you can, for example, here if we experiment, we can take low price, and there will be slight difference between the output values depending on what kind of applied price you are using for calculation of the TRIX. The this plotting is changing as we change the applied price, closing price, and this low price. Okay, so we keep the closing price as it is, and I hope you have been able to see the utility of this indicator and how we can design and develop the profitable algorithmic structure using these indicator blocks. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. See you on Monday. Goodbye.